Erwin, thanks a lot for taking time. So, raise of hands, like who knows Carro? Raise up your hand. Okay, great, a handful. So maybe I think I would just ask like pinpoint questions. Aaron, for your last FY, how much are you doing? What's your EBITDA? Like, give us the stats.
I mean, high level, what we have done the last financial year, I think 1.2, 1.3 billion top line. And EBITDA last year was about 40-something million. I think this year, hopefully, we'll double the EBITDA to about 70, 80 million dollars ourselves. But yeah, so I think we are tracking well the numbers this financial year at least. Yep.
Okay, great. Really good numbers, especially given the time right now that EBITDA is what mostly investors care about. Let's just cut to it. Like everyone's talking about like IPO, and I'm just curious, right? Like when did you and your team actually go from like maybe one day we'll IPO to like, oh shit, like we should get serious about this and like let's just go and explore an IPO?
No, we have started on this journey honestly many years ago, right? I think for us we did this particular IFRS accounting, what we call PCAOB accounting, right? So Public Company Accounting Board kind of accounting standards as early as 4 to 5 years ago, right? So that in some sense gives you an idea of how long have we started this whole IPO process, right? Because you don't really go about doing PCAOB accounting until, I mean, unless you have too much things to do. I mean, nothing better to do. You typically will not go to that level of accounting standards because there is really no need to unless you really want to list a company, especially in the United States, right? So that gives you an idea of how far back we have thought about this. But to be very frank, for me, it's a little bit more about the fact that a lot of these funds that invested in us back in 2016, 2017, this is really their 8th year, their 9th year investing in us. And typically, just for your own learnings, funds have a finite lifespan of about 10 years, right? So in other words, if the fund is after 10 years and stuff like that, obviously they're okay even if you don't return all the monies back to the LPs and stuff like that. But generally, it's expected that the funds try to close down or sell down their stakes and stuff and whatnot. So if you want to avoid that situation, the best thing to do is to return the money back to the investors prior to the 10th year mark in that sense. And we are 8, 9 years old as a company, or rather they have invested, and a lot of them have been around in the company for 7, 8, 9 years in total. And that basically means that it's just about time right now. Obviously, is there other ways to return the money back to the investors? There are, like secondary tradings, and what block trading, whatever not. So there are many ways to do this, but I think IPO is just one of the many ways of returning money back to the investors and managing the exit in that sense.
How much are you raising?
At the IPO? Yeah. I do not know. No. It really depends on the exchange that you list, right? So anywhere from 10, 15%, it really depends on which jurisdiction you list at. But I would safely say that now, if assuming your IPO is 2 billion or 3 billion or whatever not, then it is basically a percentage of that, if that makes sense to you. Yeah.
Any thoughts in terms of like where are you going to list and why?
Yes, my SGX colleagues are sitting in the room somewhere. But we have not decided, to be very frank. I think there was a lot of this market reports. I think just a few weeks ago, one of these news agencies just said that, we're going to list in the US and we've decided to list on NASDAQ and stuff like that. Look, I swear to God, I have not decided where to list. There are many considerations, for us to decide. Listing in NASDAQ, listing in Singapore, listing in Hong Kong, Japan, Australia even, and stuff like that. The good thing about us, to be very frank, is that we have options. Not many companies have that. And I say that we have options simply because in many of these markets that we could IPO in, KL included, we actually have market presence. And that's super important, right? So if you think about this, can we list in Hong Kong? We can, because we have a Hong Kong business. Can we list in Australia? Can we list in Japan? We have a Japan business as well. So this gives us a lot of flexibility in that sense. Of course, can we list in Singapore? We definitely can as well, right? So I think there are options. We're looking. We have not decided where we want to list. Yeah, I wish I could. To be honest, as I was coming in today, I just flew in from Hong Kong. And I just did 2 full days of investor meetings in Hong Kong. And I have to say that prior to going to Hong Kong, I was expecting myself today, at least 2 days after the meetings with all these investors, I met 15 of them, I would have been a bit clearer. Should I list, in Hong Kong or somewhere else? I promise you, I actually gotten more confused. Right? I felt that, after these 15 meetings that I had over the last 2 days, I got more confused in the sense that I have not really decided whether, where I should list.
Okay, I'm going to deviate IPO for a little bit. Just want to ask questions more on the ops side. So, getting a company to be IPO ready sounds quite painful. You mentioned about like on the accounting side, you have to meet some certain standards. What are some of the other things, or rather like one thing that you discovered in your ops that, or in your leadership that needs to be fixed in order for the company to successfully IPO?
There are many things that you have to get companies ready. Everything from like, compliance, controls, and stuff like that. We did away with a lot of the way we did our even things, simple things like purchasing, right? Your purchase functions and stuff like that. In the past, we didn't actually have a separate finance team looking after, say, purchasing, right? So over time, we realized that that's actually a very strong and important control function within stocks itself. So we started hiring people there. We realized that a lot of the books also was not exactly very fully automated in a sense, right? So I think another thing that we have spent a lot of time, money, and efforts on in the last years especially is to make sure that every one of our entities itself is integrated back into our ERP systems, right? I think one of the many things I would do, if I were to do this all over again, like 10 years ago, I would have just started from day zero, just using one solid ERP system and then just making sure that everything flows through and from there, and stuff and whatnot. So we run a fairly big enterprise in that sense that we have like 56 entities, right, in our company. And it is not easy at all to get everybody onto the same ERP software. And because every single company may be a little bit different. One is a financial services business, the other one could be a marketplace business, it could be an insurance business. So the way that ERP is integrated is extremely different. But if there's any one thing I would do in order for you to get really ready for an IPO, I think that has to be the fact that as much as possible, reduce any form of manual work. Everything flows into the ERP systems automatically. I think that is critical for you to get your numbers out in time for the auditors, so that you can be rest assured that you don't have to deal with a lot of these accounting issues as you are a public company, right? So I think that's one of the many things I think people don't pay attention on, but really it's as simple as the fact that all your systems, your entities, and whatnot should be on the ERP systems, and minimal manual reconciliation work as much as possible.
Okay, so let's just say that the IPO is successful, and then you raise like 200, 300 million, everything goes your way. And then what is like, in your opinion, like some big crazy goal, right, for Carro post-IPO? How would you see and benchmark that goal that you would communicate with your team?
I have many crazy ideas. Sometimes my shareholders think that I'm crazy sometimes as well. But let's just say that we've discussed all kinds of random ideas in the company. I mean, obviously everybody knows that we sell used cars. But what about manufacturing our own cars, right? Sometimes people do come to me and ask me, hey, do you want to manufacture your own cars? And sometimes the conversation is like, oh, you know what? You can't manufacture your own car because you're not in China. Why don't you invest in that car manufacturer? I think those are some crazy out there ideas that sometimes we do get asked for. In fact, just as early as last month, one of these brands came to me and say, hey, do you want to white label our cars? Basically, just put a Carro car plate. I really do not know whether people will buy Carro cars that way. So probably not that. But I think another one that I really would do if I have all the power to do all these things is really take the better lines to the US, or even take the better lines to China if I ever have the guts to do that. I think the US, very deep, very big market. I think that the moat that we have created, for that matter, our advantage versus our US comms or counterparts is that I think not only do we understand it, at least I like to think I understand the US market, because it's been based there for many years, but more importantly, I think that our inherent advantage of costs, our customer service, be it tech, the platform has already been built. I think a lot of what we do, learnings and stuff like that, can apply back in the United States as well. So I do think that if I really have all the money, resourcing, and power to do whatever I like and stuff like that, actually taking the better lines to a country like the United States may not be that bad an idea. It could also be super interesting if I were to list in the US. That could also be an interesting angle in that sense. But again, somewhere out there. But we'll see how it goes over time as we get onto this whole IPO process ourselves.
Okay, so there's several ideas and several crazy goals. But which one is your conviction backed? Like, what is the one path that you could share with us that's your conviction post-IPO? Like, you want to go into the US, you want to manufacture your own car. Is there like one conviction that you feel so strongly that post-IPO, you would definitely do it?
The short answer is no. I don't think that I will do that immediately post IPOs because I'm very afraid that okay, if you're a private company, you can do sometimes crazy ideas and stuff like that without too much repercussions, right? Like building your own cars and stuff like that, or bringing the better lines to the United States. But I think after an IPO, I do have to think of it more from the CEO of a listed company. And from that, if I put that cap on, I think I would go for maybe slightly safer bets, right? So something that's less out of this world would be like, going deeper into Japan, for instance, right? So we're already there, but does it make sense to take out the number 2, number 3, number 1 guy there? I think it might make sense to do that, right? Or going to Korea, for instance, right? Going back to the Asia Pacific angle that we have, I do think that we could stay with another 1 or 2 years of certainty, and for that matter, a bit more along the storyline of what we are playing right now today, right? And I do think that there's a lot of growth left in APAC that has not been captured. So I think the more near-term likelihood, commitment, or for that matter, the conviction that I would have would be to go deeper into each of these markets that we're already in, or maybe even enter another new market in APAC itself.
Okay, so maybe more on like a personal question, like post-IPO, do you see yourself as like still leading the charge as a CEO, or do you have like plans to kind of like bring in a CEO that maybe is a little bit more experienced, leading a public company?
Yeah, so, I have been doing investing for the last 15, 16 years, right? And, in the course of my life, in the last 15, 16 years as a venture investor, I always firmly believe that there is a CEO for everything and every time in the company, right? So at the early stage of a CEO, you need someone that is very gung-ho, someone that is actually fairly good at marketing, unit economics stuff, kind of like the launcher kind of CEO, right? As a company gets a bit more mature, you need someone that has a bit more financial sense, right? And getting the numbers, hitting the numbers, consistency, so more like an FP&A kind of style of CEO. And then as a company is getting public and stuff like that, then you need a CEO that plays the role that's a little bit more in the investor community, but at the same time, it will help a lot if the CEO has a background in law, for instance, right? So my point is that at every stage in life and every stage in the company is the same. You need a different CEO in this company. I feel that I brought the company from zero to where it is right now today. I think I've done an okay job. I wouldn't say I've done the perfect job on this, but I do think realistically for the best of the company that I do not continue to lead the company forever, right? I don't believe in being the forever CEO in this company, and I always believe that the best man for the job in that sense, right? And so on that note, I really do not know. So after I list this company especially, first of all, I would say that I will probably still be around in the company for a while. But I do want to think about succession planning, and I think that's key for the longevity of this company, because we're not here to build a company that's like $1, $2, $3 billion, $5 billion. We do want to build a company to like 10, 20, even 100 billion if we can, given a chance. And the only way to do this is to make sure that, not so much to bring professional CEOs, that implies that I'm not professional. I'm a professional CEO, just for context. But let's just say that I do think that bring the right person for the right job, I think that's critical. I still believe that, over time, my time might be best spent doing something else rather than running the business in that sense entirely. And putting the right people at the right time, the right place, would be critical for Carro to unlock maybe the next $10 billion in valuation or $20 billion in valuation. I really do not know, right? But what is very, very key and something that I really want to address even after an IPO and right now today is to make sure that I have enough potential successors in the business. And that's key. I always joke about this, and I was just joking about this just now offline. Tomorrow, if the plane which I'm heading on later crash, or if I'm knocked out by a bus and stuff like that, I can assure all of you in the room here, Carro continues to run day in, day out, because honestly, I'm not important at all from an operations standpoint. I just deal with two groups of people. Number one, the investors. Number two, potential hires. That's it. Yeah. And media.
I mean, you're definitely professional. Didn't imply that. Just from a public company point of view, I'm just very curious to see whether, when you think about like succession planning, would you find like somebody who has like maybe more experience, right, leading a public company? So on the succession planning, I find it very interesting. Like, have you, identified or have you kind of like hatched any plans? Would that be somebody that you hire from outside, or do you see that an internal promotion would make more sense?
My experience in so far running this company for like quite 9 years now is that hiring externals is tough. Because what happens is that you tend to, that person needs to be very strong and needs to be able to win the respect of the individual country heads or whatever not relatively quickly, which is tough, right? So my personal preference is always to train someone up, ideally as a mid or senior manager that he comes in, and we train him up over time. And you know what I always tell my guys internally using Mandarin, I will say you need to go and 立战功, right? Which basically means that you need to go and win wars, right? You need to go and win the battles and stuff like that, and have your battle scars and say, hey, you know what? I got this scar here from that battle, that scar there from that battle. I think that needs to be done. And so consequently, I think it's a lot easier. The people internally, we have 4,600 people now globally, we'll be able to identify with someone that, you know what, oh, this guy has fought with me in the trenches before, and so I trust him to lead the company moving forward. And I think that is the way I think I will go about bringing people into, or rather identifying the next successor in that sense. So not exactly bringing people external in. Of course, we can do that. But even if we do that, that person needs to, over time, prove himself before he can potentially take over, rather than a parachute CEO in that sense. I think that would never happen.
Okay, just a couple more questions. Like you mentioned about moat, and you're obviously in reference to like tackling the US market. But I'm also curious that like you do have a couple of like competitors in Southeast Asia playing in the region as well. So just curious, like how do you think about like competitors that is playing in the same field that you're playing? Now that you're going to IPO, how do you view competition? You know, have you achieved like escape velocity? Do you see consolidation coming? How do you view the landscape, the competition landscape for Carro?
First of all, I'm not going to buy any of my competitors, right? Period. I think that's the way I think about life. Simply put, I run their businesses. I know their businesses. I know their economics very well. I don't care what they go out externally to say. I got like, you know, X million of EBITDA this quarter, you know, that million of EBITDA that quarter. I don't know what is real anymore, but I can tell you that we all know each other's numbers in that sense, and I would venture a guess to say that the number is not exactly very accurate. But come back to this, I think it's not so much about buying competition and stuff like that. We think that the competition have sort of died down itself, right? So I will try to refrain from naming names, but let's just say that we have India-based competitor that came in, and I think 4 years ago, and then they have withdrawn from the market as well. I think they withdrawn in 2023, 2024 from Indonesia as well. So I think that was gone. That was another unicorn. There was one in Malaysia that withdrew from Indonesia, Thailand, Singapore, and also from Philippines. So that's also gone. So realistically speaking, to be very honest, as I speak with investors, and I just came back from a whole bunch of them, they asked me a similar question: what do you think about competition? And I always tell them, say that the competition killed themselves, right? And that was really true. So competitors killed themselves, and you know, we really don't care too much about the competitors as much as we used to in the past, because most of them is really out of cash. So I think that's part one. Part two of things is that I go out most of the times whenever I speak with other investors, especially, a lot of times that question of consolidation come up, right? And I would tell the investors, hey, look, if today I tell you that, you know what, I'm willing to consider a consolidation, what's going to happen is that you are going to invest in my competitor, right? Because you will always think that, you know what, worst case scenario, there's this idiot called Aaron Tan that will go and buy my, you know, that competitor in that sense. That's why the first thing I always tell any of the investors that suggest a merger is that, you know what, I'm not going to entertain a merger because I got better things to do. I don't want to end up cleaning other people's mess in that sense. The third thing, and to be very honest, the most important reason why I actually do not want to buy someone, especially in my same geography, like say for instance the Malaysian comes to mind, is simply because of growth rates. Now, the two of us together will be, I would call it 70-80% of the overall market in Malaysia, right? It's quite sizable. Now, that implies that the company that I'm going to buy, in that sense, if I were to merge with it or buy it, I'm going to have problems growing it. And that to me is the key concern, which is if I were to do this, it's not so much about investors investing in them or whatever. I really don't give two hoots about this, but I am very concerned about the company together. It means that, number one, hard to grow because market has been saturated in Malaysia already. 70-80% you are actually by default a duopoly, but you make this a monopoly, it's not going to grow, you know. The second thing is that I'm going to get in the news for all the wrong reasons because consolidation comes a lot of firing, right? Because clearly, yes, there's a lot of synergy, right? Whenever investor meant synergy, they actually mean, oh, you know what, there's headcounts you can cut. I mean, like, what the hell? So what do you want me to do? You want me to end up in the Malaysian newspaper saying, oh, this idiot Singaporean guy went over and then, bought the company and decided to halve the team. So we're going to be in the news for all the wrong reasons. So why do we want to do that kind of things at the first place, right? So in that sense, consolidation, yeah, all these bankers, all these, investors tells me the same thing. But the truth of the matter is that if they put their mind properly, really that's the last thing anyone of us should do. They should try to IPO themselves if they killed.
Okay, interesting. I would love to dig deeper, but I just asked like one last question. So, your journey from like, of course we knew each other when you were an investor, and then you starting Carro, and all the way to now like you're trying to lease the company. So I'm just very curious, if you were to look at your journey retrospectively, could you identify maybe some key moments, and then look back? What are some of the key learnings that got you to where you are today? Right, some pivotal moments.
Well, I like to thank my boss, my ex-boss, this guy called Edgar Hartless from Singtel Venture Fund, right, which you know very well. We were title sponsors of Tech in Asia when I was there. I think like more than 12 years, 13 years ago. In that sense, I was looking after sponsorship for the fund. And my boss literally, there was too many pivotal moments in Singtel. I'll just pick a few things here and there that I can just think off the top of my head. By the way, this question was totally not scripted. One of the many things I always remember was one of this investment that we did in Israel, right? So we invested in this guy, I shall not name the company, and then we did a lot. I think we invested like $20 million or so like that. At the end of the day, someone wanted to buy the company, right? And then the CEO, instead of working with the investors to sell the company, came back and talked to the investors, asked and say, how much am I going to get? He asked how much we're going to get. If I were to do this deal, he's a Israeli. If I were to do this deal, I will only get 20 million. That's not enough. I want 50 million. Right? I think the value of the deal was $100 million or so, right? And so at that point in time, he was only left with 20% of the company for context. So he came back and renegotiated this heavily. So it was very awkward to me. Because it's like, we spent all this money invested in you, like since, like God knows, like 7 years ago, and then you decided after someone wanted to buy you, instead of coming in and then everybody gets our fair share of the company, you decided to come back to renegotiate the deal with us and not with the buyers, right? So I think one thing I always tell myself is that actually at the end of the day, the investors are always at the mercy. So one key learning that I always have, I have invested in so many companies, I always tell them, say, yeah, don't worry, at the end of the day, push come to shove, the investors always very 吃亏 one. They are always at a not exactly very protected, right, from that standpoint. So I think that the portfolio companies typically have the leg up, right, in that sense. So that's one. We listed many companies. So when I was in the US, I listed 6 companies, and I know very well the companies that done well and then the companies that don't do very well after the IPO. I think one other key learning has always been leave money on the table. What does that mean? That means that when you list the company, typically the bankers will give you a range of pricing. They will say $10 or $20. If you want to be nice, you list at the lower end, right? $10, right? Obviously, that means that when you list at the lowest end of the range, that means that typically the share price should trade upwards, if that makes sense to you, right? I've seen both instances whereby the founder went full tilt that way and full tilt that way. The ones that went the other way, which is the lower range of the pricing, tends to do better, really. The one that goes all the way to that end, that one, so to speak, the greedier ones, their share price tends to be like this, right? So I think that's one other key learning. Also attached to learning from all these public companies that we listed is that visibility to numbers matters more than anything else that you think. So if you list the company, you jolly well have visibility to the numbers. In fact, I don't know, some of you may have heard of this company called IFS, IFS. Any one of you? The coconut drink? Yeah, you're not a target market. The target market is actually China. And again, I was just with Hong Kong, right? And then we were talking about IPOs in Hong Kong, and the bankers there kept talking about IFS coconut. Then you go and look at the share price of IFS, IFS coconut, and then the share price actually trended downwards. And you know the reason why? The reason is because they miss earnings, right? So which goes back to what I said earlier, which is if you lease the company ever, you jolly well make sure that you have very good visibility of the numbers. Ideally, 3 or 4 quarters. Why 3 quarters minimal? Because the investors are locked up for minimally 2 quarters, 6 months, right? So after 6 months, a lot of them will get out already. And if you miss numbers, your share price will almost certainly halved, right? So things like that. So all kinds of stuff, looking back, the other thing I would end by saying is that I think I got to thank for, because I always remember the first day in my life that I landed in US when I was asked to set up the SF office. That guy actually made me go and shut down a company, right? So that was my first time in my life as a relatively young person then, 20-something years old. My job was to go down there in a room filled with all this, like the host and like a lot of very well-known venture capitalists in the room in San Francisco, all the Sand Hill Road guys. And then my first thing was to learn how to shut down a company. And I think that was also one of my biggest learning about, in the US especially, when you shut down a company, it is an art, not a science. Everything needs to be recorded. The minutes, okay, so-and-so said this, so-and-so said that. You want to fire a CEO, not so easy. So that whole experience taught me a lot about managing your people, managing your documents, managing your investors in that sense. So everything that I do moving forward today, why I run a very tight ship in terms of docs, when the SHA, SSAs and stuff like that, is because of all my US training, right? Because my boss always tells me that, I always remember till today, this piece of paper, Aaron, you don't need it when times are good. When times are bad, when people start losing money, this is where it's very important, right? So if any of you run your companies, please make sure that you watch your SHA, your SSA must be watertight. Time's up.
Okay, thanks a lot, Aaron. Thank you very much, everyone. Thank you.